for 4 years. Of course, it's always based on the pool of money. It's when your pool of money runs out.
All right, what pool of money?
So the policies are based on a daily benefit.
Okay.
Example, if the minimum you can do is $275 a day. If you take the smallest plan, the 2-year plan, and you have $275 a day, your pool of money would be $200,750. If you take the 3-year plan, you're going to get about $100,000 more. The benefit would then be $301,125 in your pool of money. So, the spend would be $275 a day if that's how your policy is structured, and when that maximum spend is $275, and if you're spending the $275 every day on the 2-year plan, the minimum you're going to get is 2 years. If you're spending less than that, you're going to get more than 2 years out of your coverage.
Okay, but what's so especially interesting to me on the New York State partnership is that you don't have to liquidate your assets.
Absolutely
necessarily.
not. You do not.
Right.
So your
and that's
home
what's
is
so
protected.
important. So many times people that I see are so worried about the nursing home gobbling up their assets, they start gifting them away, and really, it's like I said, it's tax deductibles, qualifies for the New York State non-refundable credit, and you don't have to move your assets around. And so, again, if you want some information, Sylvia's phone number is 585-223-3861, and we're going to give her phone number again at the end of the show, 585-223-3861. She's a sister over in Rochester, and we just appreciate that she would give us her information. And if I'm assuming if people need to talk to you, Sylvia, you don't mind if they call you, do you?
No, that's what I'm here for. I like my clients to be well educated, to make a decision that they're comfortable with. And I take a conservative approach. So they have to like the plan, they have to understand the plan, and it has to be financially affordable. And when doing partnership, they need to understand what's protected, how that policy works. So that's really, really important.
That's great. Well, we really appreciate you joining us today, Sylvia, and we're going to take a short break. I'm Esther Golias, the tax lady from EG Tax. If you are interested in getting more information about insurance, the New York State partnership, or anything else tax-related, you can call Sylvia or call us here in studio, 803-0930, 803-0930, star 930 on a cell phone. We're going to take a short break, and we'll see you on the other side. Oh, that's the Stones. I know that one, right?
Yes, very good job.
I know, because they're as old as me. That's why I know the Stones. As a matter of fact, I was looking on TV yesterday. They were doing a big thing on the Rolling Stones, so that's so cool. I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. We're talking insurance. We're talking taxes. If you want to join us here in studio, 803-0930, 803-0930. Chris Fabian is in studio with me and with another special guest, my insurance agent, Bill Barber, who I love. Mr. Bill.
Hi, Esther.
He is such a good guy. I'm going to tell you, I don't like insurance agents, but I love Bill because when I first met him, I was always thinking the insurance agents were going to try to, take money from me. But what he's done is save me money. And so he's joining us in studio today to talk about insurance and life insurance and how to reduce your rates and things of that nature. Right, Mr. Bill?
Yes, Esther. Let's get started. Ready to go.
All right. Well, now, we do have a couple of people that have called in. I want to deal with their phone calls first, and then we're going to go right into how to save money on insurance. We have Carol from Grand Island. Hi, Carol. How can we help you?
Hi. I'm calling about my income tax return from last year.
Sure.
I had earned income as an independent contractor.
Sure.
And when my taxes were filed, that income was placed on line 12 under business income.
Okay.
And he had said that that's the only way it could have been reported as a business. And I said, well, I don't have a business. I don't have employees. I just worked as an independent contractor.
Okay.
And I just wanted to make sure that that was the proper place for it to be
You don't have to go down and register your business to become self-employed. If you're an independent contractor, if you're working on your own,
well, I
even
wasn't
if you aren't
working on my own. I was working for a company as an independent contractor.
right, which means that they were paying you 100% of your salary. And
Yes.
so somebody's got to pay the FICA and Medicare tax. And so when you're an independent contractor, there's no taxes withheld. And so you report that on a Schedule C. You can reduce it by the expenses that you incurred to make the income. And then you're only taxed on the net profit for the Medicare and the
Social Security.
And that's it. And so it would go on line 12, and that is correct.
So hopefully, Carol, when he did he ask you about your mileage, any supplies you had to buy, any like computer, cell phone, things like that?
No. So that would offset my profit?
That would
exactly
reduce your profit, which would reduce your self-employment tax and possibly your income tax, too. So
Now, how many years have you been self-employed, Carol?
Well, this will be the first full year. Last
Okay,
year
well,
was just
we
for a
can
couple
amend
months.
your last year's return, and if you incurred any expenses as an independent contractor, like traveling around from place to place to place, or working out of your home, if you have a separate room that you're using for producing the income, we can amend that return and get you some money back. So what I'd suggest you do is call us on Monday at 632-7886, and we'll look at it at no charge, and if we can save you some money, great.
Okay. That sounds good. Thank you.
Great. Thanks, Carol. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone, and we have Helen that's been waiting for a while, too, from Snyder. Hey, Helen, how can we help you?
Hi, Esther. How you doing?
Good.
Good. Listen, I have a quick question.
Yeah.
If I'm going to get an inheritance, let's just say it's $50,000.
Okay.
Okay? When I do my taxes next year, does that count as income, and do I have to pay taxes on it?
Well, maybe. Chris, you want to
well,
tell her about
it
what could be
depends.
taxable?
Are you getting cash? Are you getting stocks? Are you getting savings bonds?
It's money out of an account. Let's say it's money out of a CD account. It's just money my dad had in the bank. That's all it is. Just cash.
Okay, so when the
There's no stocks or anything, no house, nothing. Just money he had in the bank.
Right. When the CD is cashed in, who's cashing in the CD? You
No.
or the estate of your father?
My sister is the executor of the will. She's
Okay,
gonna be
so
cashing
basically
everything
you're
in.
getting cash.
Right, we're going to be getting cash.
So you can receive unlimited cash as long as it's not out of an annuity or stocks or sale of property.
Right.
If it's just out of a bank account and Dad already had paid taxes on it, then you can receive that and it'll be completely tax-free on your tax return.
Oh, really? Okay.
Okay?
Okay, sounds good.
Well, thanks for holding.
Okay,
thank you very
you.
much. Have a great day, Helen. I'm Esther Golias, your tax lady from EG Tax, 803-0930, 803-0930, star 930, and we got Mr. Bill, my wonderful insurance agent, who's going to help us with one of the best kept secrets, in my opinion, is life insurance, because it's tax free and it's a great estate planning tool. Would you agree, Mr. Bill?
Absolutely. It's something that people try not to talk about, try not to have to deal with.
Part of the problem is you're talking about death.
That's right.
And people don't like to talk about death.
That's right. But
Now,
it is
the thing is
like you say, it's tax free, and it's something that everyone should own. It's a way of protecting your assets and leaving them to your loved ones.
You know, it's interesting. Yesterday when I was doing my research for the show today, I went online, and that's how I connected with Sylvia, is like a term life insurance policy, which is the cheapest, correct?
That's right.
For somebody mid-60s, the cost was $5,800 a year for 15 years, so the cost would have been $87,000. But upon their death, they would have gotten a $500,000 payout. And so I thought about that, and I thought, that's a really good planning tool, especially for people that are spending money on nursing homes, for instance. If they're worried about their estate, they might want to buy life insurance, and then the money would go to their heirs anyway, tax free. So, I mean, that's a wonderful tool, and there is insurance that you can get for your life insurance that doesn't require that you have a medical exam. Isn't that true?
Yes, but that's more expensive. because they automatically, those kind of policies are automatically rated higher. If a person is in good health, they're better off getting a standard rated policy because they may be able to get not only a standard rate, but possibly even a preferred rate if their health is good enough. Right. Where on those policies that don't require physicals, they're much higher than the normal cost.
Now, what's the difference between life, like term life, and whole life?
Okay.
Mr. Bill?
Term, kind of like the word implies, it covers you for a term of time, like the example you just gave of 15 years. You're covered, you have the protection for 15 years if you die within those 15 years. That's the only thing it will cover is death within the 15 years. After 15 years, the policy is over, and you have to either take out a new policy or do something different. Whole life is like the word implies, it's more whole, because besides paying if you die, it also builds up cash value that can be used for loans. It can be used even as a retirement supplement. It is more expensive, but in the long run, the net cost can be less when you factor in the value of the cash value.
Okay, and of course, the other thing is it would, and just like if it's life insurance, it would when the person would inherit it, it would be completely tax free to them. And the other thing is people don't understand, I think many times, is that you can have a life insurance policy and somebody else can own it.
That's correct. That's correct.
So basically, if you're doing estate planning, for instance, you could have your heirs own the life insurance, and you're making the payments, but that you'd be assured that they would get the money, especially if you're going to have an estate problem.
In that situation, sometimes it's a trust that's involved with the ownership of it.
That's true. And there's nothing, like you can't come back from the dead and get them anyway, so that's pretty good, right?
Right.
I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. If you have a question about long-term care insurance, about life insurance, about insurance in general, we have an expert here in studio, Bill Barber from Nationwide Insurance. Your phone number, Bill, is 688-2199.
That's
right?
correct. 716-688-2199.
And I'm going to tell you, if you need a second quote on insurance, I will tell you, Mr. Bill has worked really hard for us, and we really appreciate his expertise. And the other thing is, what I appreciate with you, Mr. Bill, and I know I'm going to embarrass you, is that your integrity. You have such integrity, and I know that when many times you'll say, maybe we should do this. This would be better for you. And if you're looking for somebody that will really help you, that has integrity, Bill Barber Agency on Transit Road in East Amherst, 688-2199 is a really great guy to talk to. We're going to take a short break for the news. I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on your cell phone. We're going to talk about annuities. We're going to talk about disability pensions, car insurance, homeowners insurance, and how to save money on the other side. Join you on the other side. Bye-bye.
Chris, it looks like you.
Chris, you know.
Yes, Bill. The Beatles.
The Beatles. Bill. That's why we have special guests. They help us out on these.
Bill knew it was
bumps.
the Beatles? Wow, good for Mr. Bill. Well, I'm
Esther, I'm as old as you are.
That's true. That is true. When I do your tax return, I think, oh, gee.
Well,
he's my age.
I called him. I called him about coming on the air, and he asked me a tax question. I said, Bill, you don't want to do that. You're under 59 and a half. He goes, no, I'm not.
Well, let's not tell the age, though. Okay?
I won't disclose that one, but I thought he was a lot younger than he is. So
I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930. Line up your questions. We have an insurance expert, Bill Barber from the Bill Barber Agencies in East Amherst. His phone number is 688-2199. you owe it to yourself to get a second quote and have somebody else look at your insurance, because it's remarkable. You know, sometimes when I think about insurance, I think, how can an insurance company make money when you think about what you're paying in and what they're paying out at the end? But I guess it's because many people don't follow through. Isn't that kind of the way it works, Bill?
Well, they use the law of large numbers. They try to establish the premium based on the amount of risk, the expectation that you might have a claim. That's really what they try to.
But you're going to die. So I mean,
you're talking life insurance.
Like for instance, with life insurance.
Well, no, life insurance. It's life insurance. There are what's called mortality tables. They don't know who's going to die, but they are very accurate as to how much they're going to pay out in claims every year. Very accurate.
But isn't it because a lot of people stop making premium payments? And then the money that they paid in just goes to hither and yon.
If that was term insurance, that would be true.
Yeah.
If it's a whole life or permanent policy, there usually would be some sort of cash value that would be owed to the person.
Right. Okay, well, let's go to Larry, who's been holding this is Larry, my friend, from Georgia. Hey, Larry, how y'all doing?
Well, Miss Esther, all I can say, darling, is you're like wine, honey. You never age. You only get better and sweeter.
Yeah, you just try to flatter me, y'all. So what's new, Larry? What can we do for you?
Okay, a couple of questions. One, I've got a Medicare question, Esther.
Okay.
Of course, you know, as you all know, we're in open enrollment. I just signed up last year, so my Advantage plan is coming up. I want to keep it, no question. But I wonder, am I automatically re-enrolled, or do I have to call Medicare and re-register? How does that work?
Actually, I really don't know. Do you know, Mr. Bill? I think you have to call every year, don't you?
For Medicare?
For Medicare, to re-enroll, for your Medicare Advantage plan. Nobody knows.
Because I'm the young one here. The Medicare, you know, that I know Medicaid.
Because I'm still working, so I don't have Medicare. I don't have Medicare.
Okay.
I don't have any kind of
Is
Advantage
this a private
program.
plan?
But what I will tell you, I will do, Mr. Larry, is I will find out. And if anybody knows, you can call us so that you can straighten out this mystery for us.
Okay.
But my assumption would be that you have to re-enroll. That's my assumption. So don't know, Larry, but
I would think they would
we will.
mail a letter saying, if you want to change your plan, do this. If you don't, you're fine. But
if it's a private plan that supplements Medicare, yes, you have a renewal every year.
Yes.
Which would be automatic, Bill?
Yes, I just got my renewal for January 1st, and it almost doubled.
Wow, really?
Yeah. I've been paying, because mine covers the donut hole, and right. I've been paying about $480 a month that's for my wife and I just got a notice that as of January it's $420. So I called my broker and I said, looks like it's going down. He said, no. That's per person.
Wow, so it's $840.
$840 instead of $480.
And that's what they're going to deduct from your Medicare?
No. That's a private plan that I pay.
Supplement.
That's your private
That's
plan.
a supplement that I pay separately that covers the.
But I would tell you,
drugs.
I'll tell you, Larry, if you call our office on Monday,
at
716-632-7886, or you can do 1-800-998-9829. That's our toll-free number. We'll be very happy to do the research for you.
Thanks. Hey, actually, I wonder, do I have time to ask you a tax question?
Yeah.
Okay, good. Brief background. I'm having my credit union manage my assets, and so what we do right now is basically transferring, one type of asset into another. So I'm going to sell things off. Bottom line, my CFP said I'm going to have a capital gains of about $260. And we're doing it so that it keeps me below the 20% bracket. But I wonder when that happens. Well, one other thing, I have a small standard IRA, about $30,000. I wanted to, over 3 years, convert that into a Roth. Mm-hmm. So I pay taxes on that. So I just wonder, will my capital gains? Now I'm also self-employed. In fact, this year I want to have a little profit. Will the capital gains increase affect my tax rate on the IRA conversion?
Yeah, because you're going to pay, if they're keeping you under the 15% bracket, then you're going to pay 0% on the $260,000, but it's going to raise the taxes on all your other income. So what you want to do is make sure you do a tax plan so you understand. There's no losses that you can use to offset the $260,000 gain?
There are some, yes. We have to harvest that. I mean, all this is in the works. In fact, as to right now, I'm in the 15% bracket. I wanted to make sure I kept under the 20% bracket.
Well, Larry, are you single or married?
Single.
Okay, because it's $250 for single, right, Esther, for the capital gains?
It's $250.
Well, but,
okay.
And then also there's the 3% extra Medicare tax.
Well, I know that. I know.
So
you really got to do some tax planning, Larry. What I would suggest to do, which when you call Monday, maybe fax over your tax return from last year so we can take a look at everything.
Okay. Ashley, sweetie, thank you so much. I'll speak to you on Monday.
Thank you, Larry.
Bye.
Thank you. I'm Esther Galias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Okay, Mr. Bill.
Wait.
Yes.
I'm sorry. Before, speaking of insurance and the cost of insurance, we usually talk about what letters. New York State has been mailing out people letters who have signed up through the healthcare website
Exchange?
saying, yep, you're renewed, you're not renewed. So you got to be very careful. There's also people who are on private insurance through the exchange that are now getting letters saying you don't qualify, you qualify for Medicaid, because New York State's not looking at the untaxable Social Security side of things. So people are thinking, oh my God, I'm going to go for Medicaid. That's great. I don't have to worry about insurance. So they're not going to pay for their private, like independent health or anything. And they end up with no insurance because their income's too high for Medicaid. So if you received any of those letters saying you qualify for Medicaid, give us a call so we can help you determine if that's true or not, because you don't want to be without insurance.
That's a really good point, because the truth of the matter is they don't know all of your information. And when they send those letters out, they're basing everything based upon their best information. If they send you out something that says you're covered by Medicare and then you file your tax return and you aren't covered by Medicare, guess who loses? You do.
Yep.
So call us at EG Tax. We're very happy to help you. There's no charge. We have our own health insurance expert who will help you navigate the whole messy waters of the Affordable Health Care Act, tongue in cheek, and we're very happy to help you. Use us as a resource. You would call Tim at 632-7886. All right, getting back to Mr. Bilbo. Bill, you can cut your car insurance, your house, your homeowner's insurance by doing what kind of things?
Well, the first thing with auto insurance is being accident and ticket free. That's
okay.
That's
all
one
right.
of the, that's one of the. I mean, being a safe driver. I mean, what are the causes? Biggest cause of accidents today is distractions, cell phone, texting, things like that. Just people driving without patience is what I think we all see. Mm-hmm. And there is a course called a defensive driving course. That's 6 hours. A lot of places now offer it online. And that not only gives you a discount for 3 years of almost 10%, but in addition, people that I've talked to that take that course every 3 years regularly, I ask them, I say, gee, you must be ready to teach this course. And they say, you know what? Every time I take it, I either learn something or I'm reminded of something. So that course is something that's not only can be a discount, but it also can maybe even help you to be a better driver.
So they take the course and they give you the proof that they took the course?
Yep. And no matter what, it's required in New York State, no matter what insurance company you're with, you submit that to your company and you get a discount for 3 years.
All right, so can you imagine just taking the defensive driving course is going to save anybody that's listening 10%. What else can we do to cut our car insurance, our homeowners?
The other thing that most all insurance companies use for both auto and homeowners today is credit. They do not take your whole credit score. They take a portion of your credit score so that it doesn't affect your credit score. It's called a soft hit. And they turn that into an insurance financial score. And that has a huge impact on the cost of your insurance, on the premium. People who it's what insurance companies have found, law of large numbers, is people who are good with their credit tend to be better, more responsible, more mature when it comes to taking care of their property and their driving habits.
Okay, so you want to clean up your credit.
That's right.
Right?
No bankruptcies,
and really,
judgments.
You can do, and so the best way to do this, and we're always preaching about this, is to order your credit report.
Yes, that would
And
help.
when you see that there's things on your credit report, maybe you're, like, for instance, I have car loans that are at the same bank because for my company, and I make one check for 2 car loans, and sometimes they allocate it to the wrong car. They put it all on one and ignore the other. And I found it on my own credit report, and I proved that I made one payment for 2 cars. They go back and fix it, and it fixes your credit. Yep. And that's something else EG Tax will help you with. If you come in with your credit report, we will help you, but that's extremely important from a insurance standpoint, right, Mr. Bill?
Absolutely. If you pay your bills late, they could actually end up costing you more for auto and homeowners insurance.
Wow. I'm Esther Gullius, the tax lady from EG Tax, 8030930, star 930 on a cell phone. We're going to take a short commercial break. We'll be on the other side with your questions. Thanks for listening. I like that song. I don't know who does it, but I like Mustang. Who did that?
It's
Tyler?
Wilson Pickett.
Okay, you know that, Chris?
Yes,
Wow.
I did.
And
No.
Mr. Bill knows that, right?
We're saying
I'm Esther Gullius, the tax lady, 8030930, star 930 on the cell phone. And Sally has been patiently waiting. Hello, Sally.
that was
How can I help
Sally's
you?
intro song.
That was, oh, Mustang Sally. Hey, how can we help you?
I am a widow in my mid-70s, and I'm just wondering if I would be better. All my assets are in mutual funds, and I'm just wondering. I want to leave everything to I have one daughter,
Right.
and I want to leave everything to her.
Sure.
I have. I'm just wondering if the tax hit would be too much if I leave it like that. If I'd be better off getting a whole life insurance policy, and at my age to start to get it, would it be prohibitive?
Okay, well, I'm going to answer the tax part. I'm going to give Mr. Bill the insurance part. If you were to pass away this afternoon, which we are not wanting you to do, but if you did and the will named your daughter as the heir of your asset, then what she would do is that she would inherit your mutual funds at the fair market value of your death today, okay? So that would mean that if she sold it on Monday, she would pay no taxes. Okay?
Oh, that's good to
because
know.
when it goes through your estate, when it's inherited, it gets a stepped up basis. If you had given her the stock, then it goes back to your original basis plus any adjustments. And so that would not necessarily, so really if it sounds like you're in good health and there's no reason for you to sell the stock, because if you sold the stock right now, unless you did it systematically, you'd pay the taxes on it. But if your daughter inherits it, she'll get it with a stepped-up basis, so it won't cost her anything. Now, the whole life part, Mr. Bill, can you address that? Like, when you're 70, is it hard to get whole life insurance?
It can be. What we've done in some situations like that, and it would all depend on each individual case and what their needs are. But sometimes a single premium policy might work in a similar situation to that. So let's say just for a round number, it was $50,000, and you probably would get almost double, let's say 80 to 100,000 in death benefit. So you're actually increasing what you're giving to your heirs. When it's a single premium policy, the underwriting is much easier. It's because of the amount of you're paying just one premium.
So a single premium policy means you pay it once a year?
No. You pay one premium. That's it.
Oh, you just buy it up front. The 50,000, boom,
That's it.
You own it.
That's
right?
it. And you still have access. All your money is available to you as cash value. 100% of your money is available to you, and you're able to leave more money tax-free to your heirs with a single premium policy. With any life insurance policy, but with a single premium, you may be transferring $50,000 one-time premium into a life insurance policy. The death benefit, depending on your age, if the person's in their 70s, it might be around $80,000 death benefit. And now they can control who they want as the beneficiary. They can change it at any time. They have access to their money if they need it at any time, and it's not going to grow like of the potential of a mutual fund, but it's not going to lose money either.
So, and that's what's so cool to me is if you think about it, here you have $50,000 in, let's say, in Bank A, which is making 1% if you're lucky. If they move that into a whole life policy with the death benefit, especially if we're older, your heirs not only will get the $50,000 plus the growth, and only the growth is taxable. Correct?
No, they're not going to get they're going to get the death benefit.
So instead of getting the 50, they're going to get the death benefit.
Yes.
In other words, the original money that I put in then turns into the death benefit of 80. Correct?
That's correct.
Okay, so only the difference between what you paid for it and the 80 is taxable?
No,
or is none of it taxable?
the death benefit, it's a life insurance policy.
Tax-free.
It's 100% tax free.
That's a great tool.
Yep.
That's a great tool. And that's one of the reasons I wanted to have you on the show is I know there's so many things. The insurance companies have so much favor with the Internal Revenue Service. It's a great opportunity if you do your planning so you can actually give more to your heirs if that's what you want to do. I know a lot of people say, "Oh, I want to spend all the money," and that's great. But there are tools if you are somebody that wanted to make sure that you had money that went to your heirs upon your death.
In addition, there's another little twist to that a lot of companies have is that you can add what's called a long-term care rider to that single premium policy, which allows you to use a portion of the death benefit as long-term care. It's kind of you're using your death benefit while you're still alive.
Upfront.
But you're able to use it for your long-term care expenses.
And that's so cool. So now, Mr. Bill, so I'm assuming people can call you and do some planning,
yes.
Right? And again, if they need you, it's the Bill Barber Agency. Bill Barber is the gentleman right here in studio. He's absolutely a wonderful person. 688-2199. If you're somebody that's looking at how to increase your death benefit for your heirs, how to move some money around and get a great return on investments, 688-2199 is Bill Barber's phone number. And again, we got Don, who's been waiting. And Don, how can we help you? I'm Esther Goliath.
Hi, Esther. I'm just calling in response to the previous caller who had a question about re-enrolling in his Medicare
Larry. Yeah.
plan. Yeah. You do not have to re-enroll. The only thing that you do this time of the year, up until December 7th, is the time frame when you can change plans if you're not happy with the plan that you've had.
But otherwise, it's an automatic renewal?
Absolutely, yeah.
All right,
yeah,
so you don't have to call and say, yes, I still want you. They just automatically renew you.
No, right. As a matter of fact, the plan that I have a separate prescription drug plan. And actually, in the mail today, I received a new payment book for the premium payments on my prescription drug plan, which is part of the Medicare Advantage plan. Nobody asked me what I wanted to do. It's just if you want to re-enroll, you do nothing, and you're automatically re-enrolled for the following year.
That's great. I really, really appreciate it. Saves us some time looking on Monday.
Okay, no problem.
All right. Thank you very much, Don.
Yep.
I'm Esther Goliath, the tax lady, 8030930, 8030930, star 930 on the cell phone. All right, Mr. Bill, can I ask you about annuities?
Yes.
So now, what kind of rate can somebody get if they were to, and a lot of that, I mean, like you were talking about buying the single premium life insurance.
Yes.
Annuities can be single premium as well, correct?
Yes. They can be where you just put in a lump sum and that's it. You can put it where you put an annual, a premium every month, every year into it, or you can put in a sum of money and start receiving the benefit from it immediately. It's called an immediate annuity.
So you can annuitize it.
That's
right
correct.
Away. So what kind of things are affixed to that annuity that would be a benefit? Like, for instance, is there a life insurance component to an annuity?
In a sense, yes, because when you choose the benefit, you can say, okay, I want the largest benefit, monthly payout benefit to me as possible, and when I die, that's it. That would be your highest benefit. But if you say, well, I want my heirs or my spouse to get income for maybe another 5 or 10 years after I die, or I want to be sure that when I die, my wife is going to then get a benefit for as long as she lives. Now you're looking at a lower payout, and the reason for that is that there's life insurance. In other words, now you've actually, by taking a lower payout, in a sense, you're buying life insurance because instead of giving you, for example, $1,000 a month, maybe they give you $700 or $800 a month. And the difference, really, what they've calculated is your mortality.
All right, so then upon your death, in a husband and wife situation on an annuity with a lower payout, upon the spouse's death, does the existing spouse get a life insurance benefit, or does that roll over into the new annuity?
It depends which no, there's no new annuity. Depends which settlement option you've chosen. They could get a benefit, the same benefit you were getting for so many years, or they could get what's called a joint and survivor benefit, where they would get a benefit until as long as they live, and then when that spouse dies, that's it.
Okay, and then what happens with the balance of that annuity upon their death?
The insurance company keeps it.
Or they keep it. Okay. So is that something that you help people with so that they can look at all those options and figure out what's best for them?
Yes. There's the two main types of annuities are variable and fixed. Fixed has a guaranteed interest rate to it, and variable is where you have you're in the market. You have
All right, so if people need you, Mr. Bill, you can call Bill Barber at 688-2199. If you need us at EG Tax during the week, 80309. That's the phone number, 632-7886. Our website is egtax.com. If you have any questions during the week, want to get a hold of Mr. Bill, call us. We'll be able to help you. Thanks, Bill, for coming. I really appreciate it.
Thank you, Esther. Appreciate the opportunity.
Have a great week, everybody. We'll see you next Saturday. I'm Esther Golias.